Welcome to Investor in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host. And I have some exciting news for everyone today, because for the next few weeks, we're going to be doing something a little bit different with the show, putting a pause on the ongoing Becoming Buffett series we've been doing in the podcast, because on June 27th and 28th of 2017, just a few weeks from now, we're going to be having our mid-year DIY investing summit in partnership with Seeking Alpha. And it's going to be an exciting summit. We're going to have a lot of some of my favorite investors from Seeking Alpha are going to be a part of this summit, and we're going to have all kinds of topics, everything from what their favorite picks are, specific favorite investments are going forward from here, how they're shaping their portfolio for the second half of 2017, how they're hedging their portfolio in light of markets being at all-time highs, as well as how they go about identifying major trends and how do they identify companies to invest in, how do they research them, how do they make buy and sell decisions, all that stuff and more. So I hope you enjoy this preview of the DIY Investing Summit, and you can register for the summit for free at DIYinvestingsummit.com. That's DIYinvestingsummit.com for your free registration. Well, hey, Bret, welcome to the DIY Investing Summit.
Hey, Brian, thanks for having me back. Glad to be here again.
Well, let's jump into, next question is, what would you say is one of your bigger mistakes so far this year in 2017 and any big lessons you've learned from that?
Probably sticking with the Gilead Sciences longer than, was probably merited based on the slowness of the company. Go ahead and do something and change sentiment on the stock. Company is still ridiculously undervalued based on cash flow. But my assumption was they would do something in the M&A market by now to go ahead and change the narrative. So I think I'm going to be early on this one. But I give management a little more credit for heeding both activists and shareholders about doing something to change the storyline about the declining hepatitis C sales.
And as far as the declining hepatitis C sales, do you see that as going to be a significant decline overall for their business operations, and they'll need to replace it with something else? Or do you think it'll continue to be a big driver for Gilead?
It's already been a significant decline. On the last quarterly report, patient starts, the decline started to moderate a little bit. So I think the worst is probably over. But it's obviously a big hit. I mean, they did $19 billion in Hep C sales just 2 years ago. And they're probably going to do 7 or 8 billion this year. Probably going to stabilize, probably 6 to 7 billion next year. You're still going to have new people getting the infection. They're not losing market share to competitors. Pretty much everyone's going down the same. And the rest of the franchise, which now constitutes about 65% of the overall revenues, is being overlooked. That's the HIV franchise and some other minor products outside HIV, and they're growing in the mid-teens. So once the Hep C sales declines moderate, or the company, makes an acquisition, which most shareholders want, that's going to change the story, and then people will start looking at the free cash flow, which is almost $3 billion a quarter still, giving you over a 15% free cash flow yield, or over 3% dividend yield. So it's just a matter of when the sentiment's going to change. Obviously, the biotech sector being stuck in neutral the last 4 months hasn't done much for Gilead or about any other large cap biotech stock so far this year.
Well, I'm really glad you brought up Gilead, because obviously you've been a big proponent of Gilead for a long time, and a very public one. And obviously you still are. But the timing of it has been difficult, and with a number of some external, some internal factors. And I'm glad you mentioned Gilead specifically, because I've been thinking about Gilead myself, because I don't know, a year ago, probably a year or so ago, it seemed like everywhere you look on Seeking Alpha and other places, people are talking about, Gilead, Gilead, Gilead. And, it's just a matter of time, and, fill in the blank, good thing is going to happen. It's a great stock to be in, and all that kind of stuff. And it's declined significantly since then. But the thing is, and so now I feel like most of what I see is people kind of hating on Gilead, and they're angry they bought the stock, and it's the whole sentiment, bandwagon roller coaster, which to me tells me this is probably a really great time to buy Gilead. And
from a long-term perspective, it's hard to find something that has selling at 7 times earnings with over a 3% yield. The narrative will start to change next year, regardless if the company makes a purchase or not, simply because they have some pipeline candidates that will start getting more trial visibility, and more importantly, the growth in the other aspect or the other parts of their portfolio will moderate or correct what's going on in Hep C, and there'll probably be a flat sales growth year, maybe even up 1% or 2%. And that'll start to change the storyline. In addition, I expect them to, increase their dividend another 10 to 15% as we begin the new year next year, which will up the yield. So I agree with you. Sentiment's hard to see getting worse on Gilead, and you would think at this point valuation and the dividend yield is pretty much placed a floor on the stock in the low to mid 60s. What gets the sentiment improved? It may be a quarter or two, depending on whether we finally see the Hep C sales decelerate at a lower rate or the company makes an acquisition.
Well, I hope you enjoyed this brief interview preview from the DIY Investing Summit. And if you enjoyed anything about this and found any value in it, I assure you, you will thoroughly enjoy the full interview. And you can register for free at DIYinvestingsummit.com. That's DIYinvestingsummit.com. And free registration, and then the summit goes live on June 27th. And so look forward to seeing you there. This is Brian, and thanks for joining the family. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.